Hi, and welcome to another Monday Market Outlook for November 28th. So let's take a look at the situation here at the Philippine Stock Exchange as well as the S&P 500. So for this week, the two indexes are at resistance point, no? If you look at the PSEI index here, di ba? We were monitoring these resistances. But strong 2 days, no, actually 4 days, strong 4 days for the PSEI, breaking through those resistances. So we're looking at the next resistance at around 6,700, which is way more than the predicted 6,500 year-end target for the PSEI. Now the question on everybody's mind is this a breakout? Is this a legitimate breakout? Or is this a fake out? Because how far can the PSEI sustain this rally, given that we are still in a bear market? Remember, but if we look at this trend line, no, I think we've broken through that trend line, and we're looking at that again. We're looking at that next resistance as 6,700. Can the Philippine rally continue? We'll see. Lots of things are going to happen this week, especially given the slew of economic numbers which will come out in the US, which can affect the PSEI here, no? So let's look at some issues on the PSEI. A lot of stocks in the Philippine Stock Exchange are on the high side already. There's really not much to recommend for you to buy. If I were you, I'd really recommend selling some, or top slicing some of the positions that are already on their resistances, because chances are they're gonna go down soon, no? If you look at let's see, here's an interesting chart from Union Bank, no? If you look at its pattern here, let's look at SEC-B, right? SEC-B is the same pattern here. Cebu Pacific, same pattern here. And then the breakout. So, the major stocks like BDO, BPI, and Metrobank have all gone up already from that same consolidation pattern. So usually in this case, in a rally, there's going to be a rotation between the heavyweights, and then a rotation into the mid caps, and then to the small caps. So I would think that after BPI, BDO, and Metrobank has had their rally, and then SEC-B, the next in line would be the Union Bank. So this could be a potential rally for you to take some profits, or it could be just a swing trade for a week or two, no? So something to look at. Aboitiz Power here, looking at this breakout, we could see a retracement back to 33.85 or even 33. If it does go back to 33, I would definitely buy. Now you can enter at 34.80. Maybe if you want to enter, try to enter at 34, 30, right? But now it could be a bit expensive. But if it does retrace to 33.85 or better 33, then definitely go in. This is a great stock for you to consider holding out until next year, especially given that it's going to have its dividend soon, no? For another stock pick is Jollibee. Look at that Jollibee. Look at that run, no? So you can wait for it. 249 is a good place for you to get some stock in, but even better if you can get at well, it had a breakout, so but it can still go down to 225. If it does go down to 225, get some. If it goes down to 212, I'd be concerned, because if it goes down to 212, that's going to be a lower low. So the best place for you to get it is at 225, a confirmed bounce at 225 pesos, no? So going to the US markets, we have here the S&P 500 reaching its resistance. So we've been tracking this graph for several weeks already. If you see in our trend line here, as predicted, it's going to go up here. But look at the volume. Look at that thin volume over last week, over Thanksgiving week. So this rally doesn't have a lot of legs to stand on. So what's going to happen this week? Is it going to reach this level here? Is it gonna break out? If it does break out, remember, if it does break out, wait for the retrace before going in, right? Don't buy on breakout. Some traders will have that strategy, but I prefer buying at the retrace, because if it does retrace, it should go back here in this level and bounce off, so that you can confirm that it's on an uptrend. If it doesn't do that, if it breaks through that and goes down here, that's a risky move, buying up here and then ending at this support level, which is a lower low, right? But what are we looking at for this week? No, the volatility is might go up, no, because we have a slew, like I mentioned, we will have a slew of economic reports upcoming, no. November 29, we will have the consumer confidence report. This will measure how much consumers in the US are this can measure the demand, no, for US consumers in the coming months. In November 30, we will see the GDP, month-on-month GDP numbers in the US. You'll also have your jobs opening and layoffs, labor turnover report, pending home sale, and crude oil inventory. The job opening reports will measure how much people are employed at that particular time, pending home sales. When you buy a house, you will create an intent to buy that house, but it usually takes around 4 to 8 weeks before you actually sign the contract to buy the house. So the pending home sales measures these transactions that are still pending, but it's a leading indicator that gives us an idea how much home sales you will have in the next 1 or 2 months, no? Crude oil inventory, of course, as you have a lot of raw oil supplies, that can give you an indicator of how much oil prices are going to be in the future. December 1, you'll have your PCE price index month on month. Personal consumption expenditures, that PCE is a better indicator of inflation, because the personal consumption expenditure includes consumptions of consumers that may have been spent not by them but from benefits of their companies. For example, healthcare. If their company pays for their healthcare, the consumers don't actually spend for it. Somebody spends their doctor's appointment for them, but the PCE measures this consumption, measures the increase in prices of these consumptions as well. Initial jobless claims, of course, it goes into employment, the unemployment rate, which will be on December 2, as well as the non-farm payrolls. Now, what to take away from all of these indicators? Remember, this is a time when the Fed is being hawkish, which means that there's a saying nowadays, good news nowadays is bad news, right? Because if you see the numbers improving, the Fed will see these numbers improving, which will give them more reason to be hawkish, meaning they will have more reasons to increase the terminal rate or the Fed rate, because the past rate increases are not having the desired effect. The effect of which is that the Fed wants to slow down economic activity. So if there are less jobless claims, if there are less unemployed people, that means that the economy is still strong. And if the economy is still strong, this will result into more inflation moving forward. So any good news, any good news on these economic reports will indicate that the Fed is not done with their rate hikes. And the ongoing debate right now is, what is the terminal rate? What is the terminal Fed rate? Because if the numbers don't show an economic slowdown, that terminal rate may increase, which will translate into more pain in the market. No? So trade carefully this week as we have these clues as to where the market direction will be going. The thing with the US markets and the Philippine markets is that we could interpret it as, because there's an economic slowdown or there's a predicted economic slowdown in the US, investors are turning into secondary markets like the APAC markets for growth. That would probably be why you're seeing some growth here in the Philippine Stock Exchange in a breakout. So it could be an argument that it's a breakout, it's not a fake out. So, and that this rally can have some legs behind it, no? But we will see. Let's see what happens this week. But those are the things that you want to keep in mind for your trades. So good luck on your trades, and happy Monday. Thank you.